I think that the Fed is focused on global market conditions to the extent that Brexit affects that and affects currency levels, perhaps, but I don't think they have that in their radar. I think what they have in their radar basically are the employment numbers as opposed to real economic growth. I mean, goodness, this quarter, for almost the second quarter in a row, we're close to the flat line in terms of economic growth, but the jobs market seems to be doing better, and it's the one that they emphasize first in terms of their statement. So, as long as jobs keep going at 200,000 a month, I think the Fed is well on its way to a June hike.
Yeah, and our job is supposed to sell stuff and make it sound interesting. I'm having a hard time, to be frank, guys, with making the Fed interesting as of last year. I mean, it's just been difficult. And what I like about you, Bill, is that you've kind of thrown your hands up at the Fed as well. You're outperforming most of your peers because you've looked around the world. You've looked at Brazil, you've looked at Mexico, you've gone a little deeper into the emerging markets. I mean, should we be focusing more on that and just sort of like throwing up our hands at the Fed in the U.S. here?
Well, I think we should be focusing, as I've mentioned before in these sessions, Brian, on the fact that, basically financial assets are yielding nothing. We know that in the bond market. The fact that, as we're seeing today in the stock market, there clearly is a Yellen put, but over the last two meetings, it's been extended to include global risk markets. Now they've downgraded it a little bit. They've focused on a desired weakening of the dollar versus emerging market currencies, and we've seen emerging market currencies rally for sure. And I think they're acknowledging that the Fed is the world's global central banker. And to me, that should keep hikes at a minimum because of the high debt levels of emerging market countries. But, perhaps one or so, and I think June is a likely period as long as jobs keep increasing to 200,000 a month.
And you've really gotten specific with some investing ideas lately, Bill. You talked about the Build America bonds, Keurig Green Mountain. I mean, I don't know if you and I have been talking for over a decade. I don't think I've ever heard you mention an individual stock. Keurig has done well. You've bet on Brazil. Any new investment that has crossed your table that you just love since the last time you and I spoke?
Yeah, and I don't think investors can buy this now because the London market's closed. But there's an arbitrage situation between Miller Beer, people understand that, and Bush, which is buying Miller. On the London market, the stock symbol is SAB. They can buy it tomorrow morning. The price that Bush is paying is $44 a share, or in pence terms, that's a little bit different, and it trades at 42. A dollar dividend along the way over the next 6 months. It's a 5 to 6% return type of vehicle. This situation, they've already raised, $50 to $60 billion in the global bond markets in order to finance it, and so I think it's a pretty safe arbitrage type of situation, which is sort of bond-like, but returning 5 to 6%.